Management Awards.
Identifying, managing and exploiting risk has become increasingly important for the success and longevity of any business. The 6th edition of the India Risk Management Awards recognized individuals and organizations that have significantly added to the practice of risk management.
Good evening, ladies and gentlemen, and welcome to the India Risk Management Awards 2019, presented by ICICI Lombard and CNBC-TV18. In today's globalized and deeply integrated world, risk management is an important strategic tool for the sustainable growth of organizations in corporate India. The India Risk Management Awards 2019, presented by ICICI Lombard and CNBC-TV18, is a unique platform that honors organizations that have developed the best risk management practices and capabilities across business categories. Now, without further ado, let's flag off this wonderful evening. I would like to now invite on stage A.B. Ravi, Editor, Special Projects, CNBC-TV18, to address the gathering. A huge round of applause, ladies and gentlemen.
Good evening, everybody, and welcome to the 5th edition of India Risk Management Awards. Let me put today's event into context. The Lehman Brothers crisis in 2008 brought a sense of urgency about fixing systems and business breakdowns. It put spotlight on the need to put effective risk management in place. The CEOs addressed this issue by appointing Chief Risk Officer, which has now become mandatory. And they thought with this appointment, the business would be safe. But 10 years later, the world has changed dramatically. It is different. What effective risk management meant then and now aren't the same. Today's CEO faces newer and newer kinds of challenges. The risk spectrum has widened. It is no more about managing fire, earthquake, cyclone, labor problem, or for that matter, succession planning. All those are important, but in terms of priority, they are not among the top 10 risks. For instance, who would have factored in Me Too campaign or whistleblower as a risk? The Me Too campaign has engulfed Hollywood, Bollywood, corporate world, and sports world. Another menace the CRO is facing is the whistleblower risk. Increasingly, we are finding whistleblowers moving center stage. As a result, the share price of these companies are being hammered in the stock market. Given this kind of scenarios, how does the CEO navigate through these risks like a trapeze artist, artfully, skillfully, and at the same time, put smile on the face of the stakeholders? That's a challenge. We at CNBC-TV18 and our partner ICICI Lombard felt we need to institute a platform to recognize and honor the CEOs who will be able to anticipate challenges by putting in place a robust risk management that helps their companies maximize profit and minimize risk. So let me thank all the jury members, Ramesh Swaminathan from L&T, V. Ramakrishnan from TCS, K.N. Vaidyanathan from Mahindra & Mahindra, and Rui Bastos from Reliance Industry. Finally, I must thank Kenneth Rogoff for being gracious to accept our invitation and be with us today. Before I go, I just wanted to leave this thought behind. Swami Vivekananda said, take risk in your life. If you win, you can lead. If you lose, you can guide. Thank you.
I'd now like to invite on stage the man who has been at the helm of these awards, Managing Director and CEO of ICICI Lombard, Mr. Bhargav Dasgupta.
Good evening, ladies and gentlemen. I welcome you to the India Risk Management Awards. You know, Ravi rightly said that risk has to be core to business strategy and how you run your businesses. And that's something that all of us have come to accept. And that's something that we've been talking about over the last 5 years in this platform. What he said, which is also something that we see, is the nature of risks are morphing. We just recently did a survey with about 100 top corporates. I'm sure some of you were there. The top opinion leaders of this country. And what came through from the survey was that people are beginning to worry about multiple risks coming in and hitting you at the same time. There are those old traditional risks of catastrophes, earthquakes, fire, logistics and supply chain, etc., and everything else that we keep talking about. But the real menace that people are really worried about now is the emerging risks that are coming through because of the cyber-physical world that we exist in. There is no one who is really safe from that exposure and that risk. Most partners are asking us, what can you do as an insurance company to help us in this journey. Now, one of the approaches that we've taken in ICICI Lombard has been that we are not just a risk transfer partner. We are not just there for insurance and paying claims. We want to be there with you to help mitigate the risk. Can we do advanced analytics to figure out where are the risks really emanating from? And today we're working with more than 1,500 companies with those kind of solutions which mitigate and reduce the risk and manage the risk rather than eliminate and just look at risk transfer. I think the biggest pressure that all of us face is the pressure on the immediate. What is it that at the end of this quarter the markets are expecting us to deliver? But really, value is created when you look at business with a long-term perspective in a more sustainable manner. And I think it's important for us to remember that the real solution to having a sustainable business is a culture which defines your attitude to running businesses, be it in terms of ethics and integrity, be it in terms of long-term orientation, be it in terms of sensitivity to risk. There is no way to measure that, is my guess, but I guess all of us senior leaders know in the industry that that is something that is probably most important, most valuable. There's no way we can measure that, so we can't award for that, but that's something that's very, very important. Thank you.
And now I would like to welcome our chief guest for the India Risk Management Awards 2019, a Thomas T. Cabot Professor of Public Policy and Professor of Economics at Harvard University. He's on the Economic Advisory Panel of the Federal Reserve Bank of New York. He also holds the title of International Grandmaster of Chess. And if you think it ends there, there's a lot more. Very excited to have him here today. Please join me in welcoming Kenneth Rogoff.
That was an extraordinary introduction. I'm definitely coming to India more. It's interesting to talk about risk management, which for a macroeconomist is actually fundamental to growth, not just corporate growth, to macroeconomic growth. If you don't feel comfortable taking risks, you can't be creative, you can't have your economy grow, you can't specialize. I'm going to follow up on this theme about we're a decade after the global financial crisis. So if you listen to politicians, regulators, international organizations, they will tell you we've got it under control. We have sternly regulated banks. They're only, I'm talking about advanced economies, they only have half the risky loans that they had before. We make them have a lot more cash on hand in case there's a Mary Poppins type panic in the economy. It's much better. And frankly, until recently, I've sort of accepted that. I think it's by and large true that very major steps have been taken. People think, oh no, it was fine. We weren't going to have another Great Depression. I beg to differ. I think we were at a lot of risk. Well, then I think about today, what if cybersecurity, we heard about cyber warfare, a meltdown in China, risks in the shadow banking system, things that migrate outside where the regulators could handle it. Just what if, just permit me, what if something blew up, not necessarily tomorrow, but sometime? Who would be the adults in the room? Who would be the equivalent of Bernanke, Paulson, Geithner? Who would do this? Well, you say, you're just worrying about nothing. Maybe we don't have the A team. Maybe we don't have the B team. But that's okay. It's just not going to happen, right? Probably not, but I just want to think about this a little bit. Certainly, world debt is huge. It's bigger than ever before. The International Monetary Fund gives a figure of $200 trillion of debt. So maybe each dollar of debt is safer, but there's more of it than we've ever had, government debt, corporate debt. One area that former Federal Reserve Chair Janet Yellen's identified, this very risky corporate debt which investors are migrating into because they just got to have the interest. The interest rates are so low, they're willing to take risks they wouldn't take. I want to emphasize that often if you look before a crisis, it's really that last big debt buildup that kills you, that last cup of tea, in the old joke about that. Well, a perfect storm requires more than just a couple $1 trillion in debt. It requires some shock which slams the economy. Financial crises, many kinds of really deep systemic crises, come from new things. There's a saying Bill White, who had been at the Bank for International Settlements, liked to quote, you know, it ain't what you don't know that gets you, it's what you think you know that ain't. And I can think of a lot of things we could worry about. I think there are a lot of reforms that still need to be made, and I don't want to sound banal here, but if I read the IMF reports and talk to my Indian friends and academics and economists, they still point to a lot of problems with the labor laws, with product competition, land use. When someone's tried to explain it to me, my head spins. I don't begin to understand it. Although there has been, I think, tremendous progress in the bankruptcy system, in the goods and services tax, the inflation targeting central bank, nevertheless, there certainly is room to make more changes to benefit. Well, I don't want to end on a completely negative note and just saying you should hide under your beds the way I did after going to a conference on cyber war and visiting the Naval War College. I do think there are simply extraordinary technological developments at the moment, which India stands in many, many ways to benefit from. Yes, there are very important distributional questions. Yes, there's a question of how you employ everyone in India to the fullest and not just 20, 30% of the population. But India is very, very well positioned. Respect for intellectual property rights, having this highly educated entrepreneurial workforce. It's interesting, you won't probably even believe this, but in economics, there's a very widespread view that we've kind of reached the end of the line. We're done inventing things. My colleague Larry Summers somewhat pushes this view that productivity is falling and falling and falling. It's never going to be good again, and that's part of why interest rates are low. I don't see that at all. I think some of why we've experienced such low productivity has to do with the fact that we had a global financial crisis 10 years ago, and my own research shows that it has, with Carmen Reinhardt, shows that it has long afterlife. It typically takes 6 to 8 years just to get back to where you started after a deep systemic crisis. There are many parts of technology to follow, but I think the part of it that I follow most closely is artificial intelligence, but through a very narrow lens, which is that indeed 40 years ago I stopped playing professional chess. It had been a big part of my life when I was younger, but I've continued to have very close contacts with the artificial intelligence community, and the changes are they're just incredible. You think chess has been solved, they keep redoing it. They now have this new machine that was developed by a British firm called DeepMind, where they don't take any information, they rethink everything from scratch, and it can slaughter the old machine that was already slaughtering the humans in these incredibly creative ways. And so to me, and there are other applications, this same firm has made advances on the protein folding problem, which has stumped scientists, biologists for decades now. So I think there are many, many areas will make progress. One of them will probably be in education and in higher education, where the progress has been painfully slow. So anyway, I believe that this will produce new areas for risk management, all kinds of changes that we face, and I look forward to that. And finally, I want to mention one other Indian friend of mine who is Vishy Anand, who had been world chess champion when I was playing chess. There were no Indian grandmasters. There were no Asian grandmasters. And now India's become a leader. I just met a 13-year-old who I think had become the second youngest grandmaster, also from Chennai, showing this steady march forward. And I think we'll see it in many other fields. Thank you.
The 5th edition of the India Risk Management Awards, presented by ICICI Lombard and CNBC-TV18, recognized companies that have developed world-class risk management practices and capabilities across business categories.
The theme for the awards this year is for Best Risk Management Framework and Systems. They recognize the initiative taken by a company to build a comprehensive risk management framework to mitigate macro-level company-wide risk. And to felicitate the winners, I'd like to invite back on stage Mr. Bhargav Dasgupta and A.B. Ravi. I would also like to invite on stage Alok Agarwal, Executive Director, ICICI Lombard. Ladies and gentlemen, a huge round of applause for our presenters here. Let's take a look at our first award category this evening, Best Risk Management Framework and Systems, ITES.
The winner is Tata Consultancy Services.
Congratulations, team. Here's a look at our next award category this evening, Best Risk Management Framework and Systems, Sustainability. And the winner is?
The winner is Hindustan Zinc Limited.
Many congratulations. Our next category is for Best Risk Management Framework and System, Capital Projects and Infrastructure. Ladies and gentlemen, the winner is?
The winner is Larsen & Toubro Limited.
Many congratulations, team. Moving on, here's a look at the next category at the India Risk Management Awards 2019 this evening, Best Risk Management Framework and Systems, FMCG. And the winner is?
The winner is PepsiCo India Holdings Private Limited.
Congratulations, team. I'd like to now thank you, A.B. Ravi, for doing the honors. I'd also now like to invite on stage Executive Editor of CNBC-TV18, Latha Venkatesh, and Ramesh Swaminathan, Head Corporate Center, L&T, to join our presenters and give away the next set of awards. Here's a look at our 5th award category this evening, Best Risk Management Framework and Systems, Automotive and Auto Ancillary. And the winner is?
The winner is VE Commercial Vehicles Limited.
Congratulations, team. Let's take a look at our next category this evening, Best Risk Management Framework in Systems, Metals and Mining.
The winner is Tata Steel Limited.
I see an all-women's team. A huge round of applause for that. Congratulations, team. Moving on, our next award this evening is for Best Risk Management Framework and Systems, Power. And the winner is...
The winner is the Tata Power Company Limited.
Congratulations, Team Tata Power Company. I'd like to thank Ramesh Swaminathan, Alok Agarwal and Bhargav Gupta for doing the honors.
The 5th edition of the India Risk Management Awards presented by ICICI Lombard and CNBC-TV18 also saw Lata Venkatesh, Executive Editor of CNBC-TV18, discuss the risks to global economy 10 years after the global financial crisis with the chief guest for the evening, Kenneth Rogoff.
Professor Rogoff, thank you very much indeed for joining us at the India Risk Awards function.
It's a pleasure.
Well, the first question I want to ask you is there a risk that there isn't such a deep global financial risk at all? I mean, the global financial crisis of 2008, a similar measure of crisis is perhaps the Great Depression of 1929. Maybe we are too much the children of the 2008 crisis, that we probably are looking for crisis every time.
No, I certainly, as I said at the introduction to my talk, our book says they happen decades apart. They don't happen one on top of another. And I gave that reassuring message for a long time. And then I sort of watched the world unfold in front of me with Trump and Brexit and the trade war. And, you know, a part of a crisis are technical things in the system, but part of it's the handling. Also, we've done massive deregulation. Usually, everybody's scared. Regulation's very heavy, repressive, one might say, and it takes decades before it unwinds. Now it's happened almost in the blink of an eye. So I don't want to overstate it. That it's much more likely we just have a normal recession than we have another deep systemic crisis. But I no longer dismiss the possibility. I don't feel, you know, as safe as I did even a couple of years ago.
If we are looking at 300,000 plus jobs getting created a month, then is there really that kind of slowdown? Is somebody mispricing something?
Oh, I think the United States is doing really well. I mean, the United States is booming. Productivity, I think, will pick up. Investment's not as good as we'd like to see, but people are just pouring into the jobs market. The unemployment rate's actually not been falling. It's been rising because so many people who were sort of pulled out of the job market, they thought it was hopeless. But if you look at the world, as I said, China really does seem to be slowing down more than the official number. The official numbers, it was 6.5 instead of 6.6. You've got to be kidding. That's statistical error. No, it probably slowed down a lot. I think in Europe, that's what Germany's feeling. That's what a lot of Asia's feeling. So looking more broadly globally, that's much slower. And the whole world affects interest rates. It's not just the United States.
In the United States as well, the Federal Reserve has kind of pulled back in terms of interest rate hikes and now is looking in terms of a slowdown. How much ammunition does it have if a slowdown genuinely hit? I mean, is there that much space for quantitative easing or once again bloating its balance sheet? Is it prepared for a slowdown?
No, it's not. it'll tell you that it is, that we've invented these new tools. So they have room to cut interest rates 2.5%, but in a typical recession, they cut them 5 or 6%. Quantitative easing is smoke and mirrors. I think a lot of research, my book summarizes a lot of it, has shown that quantitative easing in the United States is one branch of the government buying the debt of another branch of the government. The Federal Reserve is nominally independent, but it is owned lock, stock, and barrel by the Treasury. The Treasury owns its profits. It's different in Europe, where the Germans may be buying Italian debt. So I think the early view that quantitative easing, pure quantitative easing, did something, people don't have confidence. Now, the Fed says, that's okay, we have other tricks. We'll convince you that if there's a recession and the interest rate gets to zero, we're going to convince you that later we'll allow inflation to rise above 2%. Okay. But what just happened? As soon as the inflation rate started reaching 2%, they started raising interest rates. So I don't think that convinces anyone. No, I mean, not to get into extremely wonkish territory, but I think the future, being the next 10 to 20 years, holds an entirely new regime in these emergency situations. And this will sound blasphemy, but even allowing interest rates to be significantly negative when all else fails.
We almost contemplated that, I think, about 2 years ago, 2015, didn't we?
Well, many countries did it.
Yes. Yes, Japan did for sure.
Japan, Sweden, Denmark, the European Union to a small extent, Eurozone to a small extent.
Okay, well, we had on CNBC-TV18 Professor Ed Altman just a couple of days back, and he was speaking about exactly the same problem of accumulation of corporate debt in the United States. Non-financial corporate debt, he says, is 100% of GDP, and just 20 years ago, it was 50% of GDP, and 10 years ago, it was 66% of GDP. So it's grown, I mean, exponentially, if you looked at the history of corporate debt. So his reading is that if a recession comes now, and if it's slightly deeper than than people are prepared for, then there can be very huge defaults. Is that a likely risk?
Well, absolutely, it could happen. The question is, how much will it blow up? Because if you look at normal recessions, there are also a lot of corporate defaults. If you go back to 1983, 1991, corporate defaults are common. There have been periods, I think, when 10% of the value of corporate debt has defaulted. But the question is, who holds it? If it's in, some pension plans, wealthy individuals, held internationally, it's very painful, it makes it hard to raise money, but it doesn't blow up the system. The question is how much of it might come back to the banking system and then need to get bailed out by the taxpayer and then end in a big debate about what we should do or shouldn't do. Officially, it's not that much, but I think no one knows whether some of these loans, which is called the shadow banking sector, going to the corporate debt, will that boomerang into banks' balance sheets? I've asked regulators about that, and they assure me not. I've asked academics like Anat Admati at Stanford, whose work I admire very much, and she's not so sure.
Okay.
ICICI Lombard and CNBC-TV18 present the India Risk Management Awards. ICICI Lombard and CNBC-TV18 present the India Risk Management Awards.
I want to talk to you about another risk altogether, which we thought will get resolved, or all of us think will get resolved in that 90-day period: the trade war risk. What's the chance that the US and China will reach an agreement in that 90 days, which I think is now only 30 days residual?
I don't know. I think this is a very long-term issue, and this is one of these things. If you read a lot of the press around President Trump, he's wrong. He's always wrong. Whatever he does is wrong. And this one, I would say his logic is wrong, but nevertheless, he's taken on China, and he's brought everyone with him. everyone in Congress now is behind it. You wouldn't get the Democrats to admit that they were following Trump and doing it, but this whole idea of respecting intellectual property rights, of forced technology transfer, it's got to be settled. And I don't know how easily the Chinese are willing to move on this. And so this is something that could be around for a while. Bernie Sanders was the big thing in the last 2016. He was a different personality than Trump, is an understatement, but he had the same trade policy basically. And if I were the Democrats, I wouldn't be arguing with Trump's trade policy, which is very popular in the heartlands. And even among intellectuals who dislike Trump have to say, well, maybe it took, somebody breaking China, so to speak, to get something done. So no, I don't know how this is going to play out. I hope in the short run they move it to pulling off the immediate trade war, pulling off the immediate pressures, restoring the possibility that it'll be resolved rationally. But I've really come to the conclusion that it's on the Chinese to make a move here. I don't know if they can.
But if you don't get an agreement, does it get just rolled over, or do you think there can be a steepening, a rise in tariffs if an agreement doesn't happen?
No, it can get a lot worse. There are a lot of egos and tempers. This isn't going to be a physical war, but this is how wars start. This is how problems start. And there are going to be a lot of innocent bystanders. Any small countries which depend on the global trading system, it's gotten much worse than I thought it could 2 years ago. And I fear we may not have seen the end. I hope we have, but I don't know.
Okay. Well, just a final word on the trade war. There are articles which now believe that this kind of populist nationalism is probably a new era that would last the next 30 years. I mean, you had the era of Keynesianism, which lasted probably from 1945 to 1975. And thereafter, you had Thatcherism and Reaganism and, China and Soviet Union moving towards markets. So there was this predominance of markets, which probably ended with the great financial crisis. And now a third era, which is populist nationalism. Do you think that that's how we should look at it? That there are going to be 30 years or maybe a couple of decades of populist nationalism?
I'm more optimistic, cautiously more optimistic. You mentioned Keynesianism. That was an idea, and it worked. There was sort of freeing up markets, which happened all over the world. It was an idea, and for a long time, it worked. This populist nationalism, there isn't really an idea. And the ideas of let's make everything free, let's give everyone the same income, let's have, a socialist system. It doesn't work. It doesn't work.
Basically, anti-globalization. Do you think that that will be an idea which will catch fancy, and you will see less of WTO, more of trade barriers for maybe a couple of decades now?
Well, we may see some of it, but I don't think it'll last 30 years. It doesn't work. There'll be a backlash. So I think there needs to be redistribution of income. We need to deal with income inequality. This is not the way to do it.
Okay. Well, on that hopeful note that globalization is not ended and that trade wars and huge trade barriers are not a risk that we will be heading into. Thank you very much, Professor Rogoff, for joining us.
Thank you so much for speaking to me.
That Mr. Keret, request you to kindly stay back to present the next set of awards. Also, I would like to invite on stage Mr. Sanjeev Mantri, Executive Director, ICICI Lombard, to kindly come up on stage and join our presenters here. A huge round of applause. Ladies and gentlemen, our next category this evening is Best Risk Management Framework and Systems, Travel and Leisure. And before we announce who the winners is, would also like to invite back on stage Mr. Bhargav Dasgupta. Sir, kindly join us on stage with our presenters. Ladies and gentlemen, the winner is...
The winner is Thomas Cook India Limited.
Many congratulations. on, the next category is Best Risk Management Framework and Systems Business Continuity. And the award goes to...
The winner is the Tata Power Company Limited.
Congratulations, team, on your second win tonight. Our next award is a special jury award for the category Best Risk Management Framework and Systems Business Continuity. And the winner is...
The winner is WNS Global Services Private Limited.
Many congratulations, team. Now, before we announce our final set of awards this evening, I'd like to invite back on stage Ramesh Swaminathan to join our presenters and to do the honors. Huge round of applause, ladies and gentlemen. Our next award category this evening is Best Risk Management Framework and Systems Cyber Security. Let's take a look who the winner is.
The winner is WNS Global Services Private Limited.
Congratulations once again, Team WNS Global Services. Many congratulations, team. Moving on. Our next award category for the evening is Best Risk Management Framework and Systems Risk Governance. And the winner is...
The winner is Tata Steel Limited.
Another one for Tata Steel. I'd like to invite them on stage. Team, kindly come and receive your award. A huge round of applause, ladies and gentlemen, again for our all-women team. This is their second award tonight. Many congratulations. Ladies and gentlemen, the next award is for the Best Risk Management Framework and Systems PSU. And the award goes to...
The winner is ONGC Videsh Limited.
Many congratulations, Team ONGC Videsh. Many congratulations, team. Ladies and gentlemen, it is now time to announce the final award of the evening, and the category is Best Risk Management Framework and Systems Private Company. And the winner is...
The winner is Cognizant Technology Solutions.
Congratulations, Team Cognizant Technology Solutions. Keep the applause going. This is the final award for the evening, ladies and gentlemen. And with this, ladies and gentlemen, this year's India Risk Management Awards has come to an end. I'd like to congratulate all the winners, and I want to take this opportunity to thank our presenting sponsor ICICI Lombard and our knowledge partner PwC. Many thanks to our chief guests, jury members, presenters, organizers and our wonderful audience. Request all of you to kindly stay back, and would love all the winners to join back on stage for a quick photo op. Sir, many congratulations to all the winners.
ICICI Lombard and CNBC-TV18 present the India Risk Management Awards. Focus, ideate, innovate, enable.
presented by